when you set up your business, the goal isn't because you want to work forever, right? The goal is because you want to provide a good income, you want to enjoy what you're doing, and you want to be able to retire. So if you want to be able to do that, sitting down and making a plan with somebody about what that could look like, how that looks like most contractors aren't paying themselves first. It's whatever's left if they get a paycheck or not. But then they are paying an exorbitant amount of taxes because they're not paying themselves first, right? It's like, I'm pretty sure I'd rather pay it to me instead of the IRS, right?
Yes.
So when we stop and you think through this and you go, okay, what is scalable and what opportunities is this going to bring? Well, when we have investors that we have shown them not only how to pay themselves first, set up a retirement plan, direct that retirement plan. Now they're able to invest with us, and now they own multifamily buildings that they never would have owned, right? Because of the opportunities we have that now they can participate in.
Welcome back to another amazing episode of Ask Me How I Know. I am grateful to have you here once again. And oh my gosh, the pre-conversation that I've already had with Bethany Finch has been extraordinary. And I already knew it was going to be amazing because she and I have spoken before and we're connected over on LinkedIn. Remember, if you're not over on LinkedIn, you are completely missing out. It is a magical place to connect with really amazing people that are really trying to impact the world in powerful ways. So I don't even want to hesitate in jumping into this conversation because Bethany has so many amazing things to share with us today. Bethany, thank you. I am so happy to have you here and Ask Me How I Know.
Oh, well, thank you, Julie, so much. I appreciate you inviting me and the opportunity to hopefully be a blessing to your listeners.
I have no doubt that you are. Now, awesome audience. You know that a lot of my guests have a lot of skill sets and trades. So like, we're going to talk about one facet of Bethany that she has, but I've spoken with her and I follow her on LinkedIn. So I know that this is like just one of the many layers. So I want you to make sure that you go and connect up with her. But today, Bethany and I were talking about the importance of credit and how so many people don't understand how to use credit and what credit's good and bad and how to overcome some challenges. And golly, Bethany, you and your husband have overcome so much and learned so much. We could say, can we ask you how you know?
We know personally, firsthand, lived and learned, done a few things differently, done not so few things differently, right?
Right, definitely. Well, as we were talking about credit, where do you see that going, the need? Maybe we should talk about why people need to understand credit, especially as our economy is shifting.
Absolutely. Well, and so there's multiple things that are making the economy unstable, but that instability is what's kind of driving people to think differently, right? So in school, one of the big things, pretty much the only thing they teach you is you go to work, you get a job, you pay your bills, you supposedly retire. Magically, it somehow is supposed to happen. That's as far as it goes pretty much in schools. So the challenge with that is it doesn't work. It hasn't worked for a long time. It hasn't worked since like 1940, right? Pensions, all that stuff went by the wayside, this and that. So people are being forced to think differently and outside of the box. And what does that look like? So they're going to all these different places and they're getting all this kinds of information and they don't realize how to apply that information to their situation. So for instance, you hear constantly people are talking about other people's money. Constantly use other people's money. Well, what does that mean? And it feels contradictory because it feels like, no, we've been ingrained. It's been beat into our head. You don't take from other people. You don't, and they don't understand this.
You got to do it on your own.
Yes. And they don't understand how our economy works. So on the personal side, right, in the credit world, the banks want to see that you have tons of credit and they don't want to see you use any of it. They want you to see like one house payment, maybe one car, and that's pretty much it. They want to see that you have access to a ton, but they don't want to actually have you use any of it. On the business side, it is the complete opposite because our economy is built by the flow of money. So when we turn around and we spend money with this vendor, and then that vendor spends money with this vendor, and that money's, it keeps economy flowing. So you don't become a stagnant pond, you become a flowing river. So when you talk about other people's money in that sense, you're keeping the economy flowing. You're part of that process. You can't think about it with that personal filter, right? And how the bank looks at you. So you have to understand how they're looking at things. So when they look at credit, like right now, interest rates are at all-time lows, right? And they're talking about even going lower. And then they're talking about this hyperinflation. And everybody's like, well, which way is it going to go and what's going to happen? So if you don't understand how that works or what causes that or what's driving that, then you just kind of sit and wait. Well, as you know, you could wait 10 years before you see anything really happen. It doesn't happen overnight. It doesn't happen. It doesn't jump 5 points in one quarter. It takes time and you watch it slowly do something. So the cool thing is the government does a great job at tracking all of it, and you can find all of this data. It's free and available anytime you want.
The average person, I would have to say it might be kind of like reading, the city planning code, the building codes, a little bit of as building planner was just telling me, like, yeah, you could read all the things about the zoning, but it'll probably put you to sleep. But I'm like,
exactly. And how does it apply to you and what do you do, right? So when we stop and look at it and go, okay, do I need to understand credit? Most people think, well, no, I just pay cash for everything and it's fine. They're 100% limiting not just their life, but their propensity to be able to deal with what life throws at them. I'm not sure exactly how long you've been married, Julie. I know we're going on almost 30 years. And in 30 years of marriage and raising a family, you go through some things. You go through some financial difficulties, things that you cannot control. We actually had a situation where somebody ran a red light, almost killed me, my newborn son, and my daughter, and it absolutely thousands and thousands of dollars of medical bills. And we had no idea that there was a thing called medical bankruptcy. Had no idea. Nobody told us anything. We just knew we had to pay these medical bills, and they were, church members, so we didn't want to like stiff them, but we didn't know how to pay it. So we went out and got a credit card, and we just put all those medical bills on there, and it was over $20,000 worth of credit of bills, just of medical bills. And in doing so, we just paid that off 20 years later. We just got it paid off in November. That was a very hard go for that long because we didn't know something. We
what?
didn't know there was another way, that there was a better way, that there's something else that we could have done or worked out or, effectively done differently. So when you can't control that, right? You can't control it, someone hitting you in the car or a job loss, right? That keeps you unemployed, like especially with COVID, right? And so sometimes you're changing jobs, and how do you figure that out? And what does that look like? And how do you still provide for your family?
These are real. I appreciate this so much because I think everyone listening, myself included, like, I know people who have these medical situations, where similar situations, an accident happens, and then you're left with this gigantic bill. And I mean, they're trying to make it so that our insurance is better these days and things like that. But the reality is medical bills are exorbitant. And if you have that type of trauma in your life, even if you've gone through maybe a Dave Ramsey style of financial planning, you're still not going to have enough in your reserves to take care of that level of an emergency.
Right.
And the job loss, that's so probably hits home to a lot of listeners because it's affected. The 6 degrees of separation on that topic alone is more like 2 degrees or 1 degree. So when you think about the strategies and tactics, and by the way, let's give a plug because you teach a credit class, correct?
Yeah. So, well, part of I was a teacher for many, many years. And so math and science, obviously, right? So, financial literacy, I actually have a program that we offer to churches. We offer it to free. We offer it to individual homeschooling groups, small fees, things like that. But then we want to make sure that kids know how to talk about money and what that conversation looks like, because so many parents can't even have that conversation. And what does that mean, especially in today's day and age with Bitcoin? And most parents don't even know what that is and what that looks like, right? So, but we also have a credit hacking program that is tailored to your individual needs, whether it's on the personal side, whether it's establishing business credit, whether it's figuring out a way to use other people's money in your unique scenario to build out a real estate investing business, whatever that is. The algorithm is always the same. The individuals involved is the only thing that changes.
Oh, I love it. Okay, so I just wanted to make sure that, if someone is listening, that they get that plugged into their brains, like, that this is an option out there. And we'll give you further details at the end of the show. But so Bethany, like, somebody has these medical issues, or they've lost a job, or they want to make some type of transition. What are some of the tips that you would say? This is how, ask you how, you learned the hard way. You had to go through these things you didn't know. Now you know. What should people do in those type of situations?
So first and foremost, most people do not realize that the hospitals hospitals, doctor's office, all of them have a two-tier system. They have a cash system and they have an insurance system. So if you have any insurance, auto insurance, medical insurance, any insurance of any kind, you're in that insurance system. Well, that means they're marking up their prices. So they don't know that when you go into that insurance system, that service that may have cost you $100 cash is now $300 insurance. And that's to cover all the extra fees and everything and all the extra man hours that they have to do to deal with the insurance and all the paperwork and all of that. So that's why it's not like we're just gouging people. It has nothing to do with that. It's 100% due to absorbing the costs of that. So then on the flip side, if you're paying cash and you have no insurance involved, you get that reduced rate. So that's first and foremost. So then once you figure out, oh, okay, well, if I pay cash, it's only $100. Well, I can afford $100, but I can't afford that 20% deductible that my insurance is going to charge me. See what I mean? So when you actually ask before they do any billing, you ask them. It's a simple thing, but most people, again, you don't know what you don't know.
And
Most
I have
people
this insurance and I pay for this insurance. I want to use my insurance. I mean, like, if I'm going to have to be sick, injured, whatever, let me use my insurance.
Exactly. So if you use your insurance, great, by all means do it. But ask yourself, what's that deductible? If I use my insurance, what am I deductible going to be? How much am I going to owe? And then ask them to give you those same numbers if I don't use insurance, and look at the cash side of it, because it could be a difference of you're paying 2,000 or you're paying 20,000. It can be seriously that big of a difference. The
Wow.
second key thing that we also learned was that when you have a balance with these hospitals, doctors' offices, and things of that nature, at the end of the calendar year, they can't carry over balances into New Year's. So they either have to write it off or absorb it, right, as a loss, one way or the other. They're writing it off on their taxes or they're calling it a loss. And so whatever amount that you've agreed to, if you say, hey, I owe $1,000, I'll pay you $100 a month for the next 10 months. That extra that hasn't been paid at the end of the year has already been written off. So it's not like you're trying to stiff them, but the next year you'll get it paid off, right? You'll just keep paying. But most people don't realize you can make a payment arrangement. So if they say, oh no, our minimum is 50, I'm sorry, I can only afford 25. So they can either take their money or they can't. But if you put it in writing and they deny it, it hurts them because they don't have a valid claim, because then at that point it becomes fraud, because you did try to negotiate and the government actually put things in place to protect you so that they can't dictate what you can afford, which is what they try to do, right? Your minimum payment is X, Y,
Right.
and Z.
Right.
And as long
Oh,
as you're making payments, they can't do anything. So it's a key factor that if we would have known, we would have never put that on credit cards. We would have negotiated a payment plan and we would have paid it off at least 10 years sooner. Easy.
that is I mean, 20 years is a long time, but I commend you for sticking to it, and persevering and getting it paid off. Now, when you talk about the part of bankruptcy and filing a medical bankruptcy, um, you know, tough times are going to come for people.
Right.
like they happen. And if you think that life is easy, like life will knock you around. That's just part of life. And it grows our character and who we are. So,
Right.
what kind of advice would you have? What's the difference between a regular bankruptcy, as we're used to speaking about bankruptcy, and a medical bankruptcy?
So it is a different filing. So a medical bankruptcy cannot be held against you according to the mortgage industry and all of that. So if you have a medical bankruptcy, yes, it will report, but it is not to be used against you to penalize you. So they can't deny you, oh, you have a bankruptcy. No, I have a medical bankruptcy, because it's documented completely differently on your credit report. But the interesting thing about it is it was put in place because of the exorbitant insurance costs. And then people would go in, they'd have this life-threatening situation that would happen. They'd have $1 million. Well, who's going to be able to pay off $1 million in their lifetime, right?
Right.
Most people will never do that. So the government said, look, we need to figure out a different solution here. And the solution was this medical bankruptcy. So as long as you've gone about, you've tried to negotiate, you've tried to do, there's certain steps and things that are in place. And if it's just this exorbitant number that everybody knows is just never going to happen, that's what it's for. So you're not trying to get out of it, but you also know you're never going to overcome that. You don't make enough money, especially, if you're the average American making $60,000 a year or whatever. How many years does it take you just to earn $1 million, let alone pay it off, right? Interest, late fees, all that kind of stuff. So that medical bankruptcy is a way that the government provided. And most people don't realize the same is true. If you went into the hospital because of COVID and they ended up keeping you longer, right? So a lot of times they got quarantined and now they were there a month instead of a week or 2 days.
Mm-hmm.
So this and again, another exorbitant hospital bill, right? Because now they're billing higher because of the insurance. They put in different acts that got passed through the CARES Act and different things, they did put different allocations in there. So the medical providers actually are getting money for that. So it's not one of those, well, I feel bad because I'm not paying my bill. It's like, yeah, but they have the opportunity to get money for that. So if it is COVID related, they're able to actually claim that, get money,
Mm-hmm.
even if you don't ever pay them a dime. They're still getting that
Mm-hmm.
money. They're filing it. You also have the opportunity to file for that in regards to getting those grants and those monies. Different states have different programs too.
That's really interesting. And I can think of a lot of people that I'm acquainted with that maybe went actually to an emergency room during the pandemic that don't typically do that. And when you go into emergency room, we don't have that situation in our life often. I just remember when my son broke his arm, that
Right.
those bills can really stack up really quickly. Our hack was
Right.
that was go to the doctor first and get it confirmed that it's broken. And then we got let's see, he gave us an x-ray, like it was like so much less expensive. He like sent all the orders in and, it's like, okay, well,
Right.
there's a workaround.
There is, but had you not known that, right? You wouldn't have known
Right.
that had you not done it. So we actually, here's something else that I learned through the pandemic. So I am fighting, most people don't realize how much fraud is out there. And it's not fraud on the people's part, it's on the provider's part. So it's not like doctors are fraudulently flying. What's happening is all these hospitals are trying to recoup losses. So during the pandemic, if you had to go to the hospital, which I had to go to the ER, I was out of state, not in my home state, and they didn't even let you in the hospital. Like you had to wait outside and all this stuff. And then they'd screen one person at a time and then they'd let you in. And I mean, it was like 3 hours and I never even got to a waiting room at that point. It was absolutely ridiculous, right? So 3 hours of my life sucked away. And I'm sitting here and I get into the waiting room only to have an admin person come out and say, oh, I'm sorry, we can't help you. Here's the exit. I was like, what? They're like, oh yeah, well, you've told us, why you're here. I was trying to get a prescription refilled, and because I was out of state, I couldn't refill it. I had to get a local doctor, and the only way they would do it is if I went to the ER. So I'm like, okay. And I'm like, what do you mean you can't? You can't help me? Well, I'm sorry, we just can't help you. You need to go to a regular doctor. I'm like, your regular doctor is the one who told me to go here. I mean, it was just this vicious circle, right? Well,
Wow.
then, so I never see a doctor. I never get a treatment. I never get anything. And they fully billed my insurance for the whole thing. That is 100% fraud, right? They never saw me. They never did anything. And then they wanted me to fill out admin papers and, sign off all this stuff. And I said, absolutely not. You have done nothing for me. I'm not signing a thing. So when the bill came through, I called up my insurance and said, do not pay it. Reject this bill. They didn't see me. The reason you can do that is because they're required to provide medical evidence. They don't have any chart notes. They never saw me. They don't have anything to say that I was there. So how can they bill? So what you do is you basically are leveraging the system against these fraudulent claims. And that's what so many of them are doing to
Wow.
recoup their losses. Yeah. And but we don't pay attention, right? You just take the bill and you just go, what? Okay. And you just assume you got to pay it. It's not true.
Or you just assume your insurance is taking care of it. And well, they didn't do anything for me. So there's not going to be anything charged on and billed to my insurance.
Yes. Yes. 100%. Which
Wow.
is what I thought. So when I saw this bill, I was absolutely livid. Absolutely not. I'm not paying this and I don't want you paying it. But that's what they said. So many senior citizens have been taken advantage of because the same thing. They go to the hospital, they think, oh, if I didn't get treated, that they'll won't pay it. But that's not the case. It's not happening. So we just
Wow.
basically need to stand back up and hold people accountable to what's true and right. And the insurance, it's just a system, right? It's just a
Right.
computer putting in your name. The system automatically sends out this diagnosis code. It automatically does. The system does a lot of it.
Right. Right.
You got to do a
Wow.
disruptor.
That is so crazy. Shifting gears a little bit, and I love that. And I also want to just encourage anyone who is caring for someone in your life who might have medical bills to really be
Mhm.
on that. I learned that after a car wreck. I was hit head on by a drunk driver when I was 18, and I watched
Oh
my
no.
mom navigate those waters. Yeah, God just completely protected me because the car was totaled. So,
Oh.
um, yeah, and so accidents do happen, and but watching my mom navigate, always be aware of what's going on the insurance. But
Mm-hmm.
a lot of times, unless you've had somebody be a role model or you've paid attention yourself, you might not know about this. You might look back through some files at your house and be like, oh my gosh, look
Right.
what happened. so
Exactly.
so let's shift gears a little bit and let's talk about on the business side of things. Let's just say that somebody, on the credit side, and they're looking to invest in whatever it is. Maybe it is Bitcoin. My son wants in on Bitcoin, and so
Mm-hmm.
maybe they're looking to invest in whatever asset they're investing in, and they're feeling like, well, I have this. Maybe they have some poor credit, or maybe they are trying to build credit. And maybe actually we should talk about that. Is what are some strategies some people could do to build out business credit so that it's not bogging down their personal line of credit?
Right, right. So most people, like I said, first off, they don't even understand the differences, right? So on the personal
Yeah.
side, every time you do an inquiry, you get dinged on your credit score and it goes down and it goes down and it goes down. It's the complete opposite on the business side. You can apply as many times as you want. It never affects the credit score. It doesn't ding it, it doesn't lower it, it doesn't anything. So keeping that in mind, to open business credit, the first thing people have to have is they have to have a tax EIN. Don't use your social security number.
Mm-mm.
It's easy to get a tax EIN, right? If you don't already have an LLC, I always recommend getting an LLC. But if you don't, you can get a free tax EIN. So it's not your social security number, but you definitely do not want it to be your social security number. But
And
then,
that's like literally, y'all, this is a 5 minutes. Go to the website, fill it out, put your
yep,
LLC information in, and maybe even the same day you have your EIN.
you can get it in 5 minutes. Yep,
Yeah.
right on the irs.gov site. Yep, 100%.
So they
Yeah.
get their EIN, and then what?
So once they've gotten their EIN, when they just like, if you picture it in the sense that there's credit bureaus that are reporting on, you've got TransUnion, Equifax, and Experian, right, on the personal side. There's also on the business side, Dun& Bradstreet, which is the number one business reporting one. And then the second one is Experian Business. So those are the top two. So what you want to do is you want to go to Dun & Bradstreet and set up a profile. When you set up a profile, you're putting in the information of your business in there, right? Your tax EIN, all of that information. And then here's the kicker, right? So
Okay.
I call it my credit hacking program because a hack is just that, the shortcuts, the ninja tips, the let's get it done faster, smoother, easier. So the key is to make sure that first off, that the address that you are using is a physical address. It cannot be a PO box. It cannot, they have to be able to physically look up that address. So that means sometimes in some states, you'll need to have a registered agent that has a physical address if your business is residing at a PO box or something of that nature. So that's the first hack. The second hack, aside from having it be a physical address, is on the business side, you need to make sure that every application you fill out for the business matches 100% what your D&B profile is. So for instance, let me give you an example. If your business is this PO box that you always get your mail at and this and that, and you're filling out an application, but like in our state, we have to have a registered agent. So my registered agent's address is actually what's on my Dun& Bradstreet profile. So some of my business lines of credit were rejected because I put down my PO box, not thinking anything about them not matching. I had no idea that that was an issue. If they don't match, the computer automatically rejects it. So you literally want the exact same information, even down to like if you put street or suite, however you spelled it out, the exact same. So I literally took a picture of it and keep it in my phone. So every time I'm applying, I'm using that exact same information because it's just a computer. It's just going to kick out based on those discrepancies. So then
That
after you actually go through and find at, places, okay, I've got my Dun & Bradstreet profile set up. Now I want to get something up and going. You can't go immediately out and get, Bank of America's business credit card. It doesn't work like that, although we wished it would. You do have to build up business credit. So there's like different tiers that you would go through to build them up. And basically, when you get 12 to 15 lines of trade credit, is what it's called. You think of back in the day, they'd go to the store and they'd, hey, just put it on my account. And hey, they go to this place, hey, just put it on my account. And then at the end of the month, they settle up all their accounts. That's basically what you're opening up are trade lines that are, some of them maybe just a net 30, which means every 30 days you're paying them off in full. Some of them may actually be a balance that you can carry and you just pay an interest rate. But when you have 12 to 15 of them actually open, then you can start getting those Bank of America, credit lines of 20,000 and things of that nature.
that is really interesting. Now, what's the advantage of going through this? Someone's listening and they're like, okay, I mean, sounds like a lot
Why
of
would I do
easy
this?
steps, but it's still going to nickel and dime my time. Like, why do I want to go through through these hoops?
Yeah, no, and that is a great question. So you always hear the term other people's money. Use other people's money. You don't need any money to get started. Just use other people's money. So here's the key. So for instance, if you understand the concept of using other people's money, right? It's recognizing, okay, so I don't have this money in my bank account now, but I'll have it after the sale goes through, or I'll have it here, right? It's not use other people's money and never pay it off.
Right.
That's the big fallacy there, right? People need to
Everybody hear
understand.
that right now.
You do have to pay this off. That's right. So with that being said, if you're starting out and you're a single family home flipper, which is what a lot of them do, they start out wholesaling, and then they build up and then they get enough deals done. So now they keep one for themselves. Well, you can actually establish credit lines in the business name that you could use. You can establish them with Sherwin-Williams. Well, now all your paint's taken care of. You can establish them with Home Depot and Lowe's. All of your supplies are taken care of. You can work out agreements, trade agreements with your contractors. So there's different ways that you can do that depending on the scenario. Sometimes it's a matter of how you structure your payment plan and your payment schedule, but that could be very, very little cash actually coming out of pocket. And if your market's anything like ours, Julie, ours don't even go to the market. They're gone before you even, it's like I have a buyer's list that's so deep right now that if my property ever made it to market, it would be a miracle,
Right? Yes. Yes, that is
Yeah.
how our market is, even in rural North Idaho. It is smoking hot.
Right? So we can use other people's money in that scenario to 100% do that flip. And then a lot of times if you're using hard money, right, then you could use the hard money to then pay off those, but then you're not paying interest because you pay interest. Different hard monies are different, lenders are different, but each lender has it set up where you're either paying interest from day one or you're paying it as you draw it. So like
Mhm.
we only do 3 maximum draws on any of our projects. And so you need to be able to float some of that. Lowe's, Home Depot both do 60 days, net 60. Amazon has a net 55 account. So that means you have 55 to 60 days before you actually have to pay those. So that can get me from draw to draw to draw. And then I'm not telling my contractor, hey, wait till my draw comes in, right? And
Right.
so it's how I schedule it. And that's how you capitalize on using other people's money. But also most people don't realize you can do it this way. As your business grows, when the credit is set up on the business side, it's not reporting on your personal side. So that debt to income ratio, all of that doesn't affect you because it's on the business side. So you can still get approved for loans on rentals or any of those kind of properties. You can keep your credit score up, but a lot of it is non-recourse, right? So unless there's fraud or anything, it's going to stay attached to that business. So you can actually protect your family. You can protect a lot of them. There's no personal guarantees and things like that. So it allows you to maneuver and do more with a little less risk. Then you can turn around. And as you get better and better, and say you do get that Bank of America credit card that's 25,000. Well, I actually know some really cool, amazing hacks where you can actually take that 25,000, not have it be a cash advance, turn around and buy a property with it. Now you're using other people's money the right way, because now you're not waiting for a lender. You're not doing any of that. You're purchasing that property, you're renovating it, you're selling it, you're then paying off that card. Boom, done. That's scalability. That's fast. That's streamlined. That's where it's 100%. You're using other people's money all the way around.
That is so powerful. Let's go back to recourse, non-recourse real fast, because unless you know, unless you're deep in investing or investing in some level, you might not be familiar with those terms. So, I mean, you and I know I want non-recourse all the way. So.
Right. Right. Well, so again, people filter through what they know and what is real to them, right? So with the schools not teaching economics, and they're not teaching, good math skills and things of that nature, people don't know definitely what recourse and non-recourse is. But when you sign on the dotted line, I agree to these terms, basically you're agreeing to their repayment plan. And in their repayment plan, they say if it's recourse or non-recourse. Well, that recourse means they can come after you, they can come after your assets, they can come after anything that they can get at to pay off that debt if you don't pay it. Non-recourse means they can only come after if there's fraud, like I embezzled all this money, right? That's fraud. They can prove it. Now they can come after me personally. They can come after my assets, things of that nature. But non-recourse, they can only go as far as that LLC. So that means they can only make the LLC pay it and not the individual people. So there's that level of protection there, being a business as opposed to a person.
That is such an important delineation for people to make, in my opinion. And some people that are newer in the investment community, they think, oh, I can only get non-recourse through agency debt. And by agency, I mean, I'm talking about the big players, government funding, like Freddie and Fannie. I always get their names mixed. Always,
right,
like for the last 20
right.
years, I've gotten their names mixed up. But if you have that, they're not the only ones. And some smaller banks, some smaller community banks actually can offer you a non-recourse loan. It's not as common. I am going to say definitely not as common, but it is still out there. And so when you are shopping around, for the right loan, if you are going that particular route and you're not going through this other, using credit, depending on the size of the project you're working on, like definitely ask and say, so do you have any non-recourse options? Rule
right.
that out.
Right, exactly. Well, and so the other thing too, that people, again, keeping that in mind, right? Like you and I were talking, many people don't know, we are RV remote investors now, and the Lord shifted us in a completely different direction to actually go to our investors. And so our RV is 100% owned by the business. It is 100% tax deductible, not because it's our primary residence, but because it is our mobile office and it's provable, right? So many people want to be able to do that, but they can't really prove it. So their CPAs are like, I don't think so. Ours is 100% provable. So depending on which states that we choose to domicile in, different states, they don't even charge you, like Montana doesn't charge us taxes and licensing on our RV because it's owned by a business.
Interesting. Now, what was that word? I've never heard domicile.
Domicile. Oh, well, most people
Yeah.
have never had to hear this word. It's basically the lovely fancy government word for resident.
So let me ask you this, because traveling in the fashion that you're traveling is something that is on my family's list, and it is for investment purposes. And I'm just going to be honest, also mountain biking. I tie mountain biking to everything. I've even asked my CPA, I said, how can I make my mountain biking tax deductible? You know, because
Right.
it's just part of the brand, really. He's like, is it
It is.
provable, Julie? Is it provable?
See?
So,
Yeah.
that's what he said. And we have a call scheduled. But all that to say, oh, where was I even going with that? But being able to have a personal residence, because you have your home still, in another state, but then you have the domicile in Montana.
Well, no. So domicile. So we, in this situation, if you go full time as an RVer or full time on the road per se, whatever capacity that looks like, you choose which state you are to be a resident of, which is that domicile word. Most people don't realize that in choosing that, your medical insurance, what's available to you, it's actually by state, by county. So if medical is a big concern, like in our situation, it's a very big concern for us. And so we have to be very conscientious of that. So we look up each of the states and then look up, okay, what insurance programs are available there? Do we like this? Do we not like this? And then we can go from there, because most people just don't know. But again, lived and learned, we've gone through this and realized, oh, so you mean if I use my address for my property that's here, I only get these insurances. But if I use this address, right, as a real estate investors, we have multiple properties, multiple addresses, and different things that we could use. And so we recognize that, okay, what's going to be the best move here? So in doing so, we don't always pay attention to things until they become on our radar. Like, I never knew what domicile was either.
Right. And now I very much know. And so that is fantastic. And I just love that you're on the road and going to visit your investors and just educating people and serving people so well.
Yeah, well, so like this background that you're seeing here clearly is not my RV, right? It's actually one of our executive rentals. And so that's where we're not sure where the Lord is picking us up and moving us, because we do have executive rentals, all across the country in different markets and things, as well as multifamily properties and things. And that's one of the things that people don't stop to think about. With scalability comes tremendous opportunities. So when we develop our business, in this case, ours is a real estate investing business, right? Other people may have a contracting business or whatever it is. But when you set up your business, the goal isn't because you want to work forever, right? The goal is because you want to provide a good income, you want to enjoy what you're doing, and you want to be able to retire. So if you want to be able to do that, sitting down and making a plan with somebody about what that could look like, how that looks like most contractors aren't paying themselves first. It's whatever's left if they get a paycheck or not. But then they are paying exorbitant amount of taxes because they're not paying themselves first, right? It's like, I'm pretty sure I'd rather pay it to me instead of the IRS, right?
Yes.
So when we stop and you think through this and you go, okay, what is scalable and what opportunities is this going to bring? Well, when we have investors that we have shown them not only how to pay themselves first, set up a retirement plan, direct that retirement plan. Now they're able to invest with us, and now they own multifamily buildings that they never would have owned, right? Because of the opportunities we have that now they can participate in. And so it gets better because all of our opportunities are impact driven. So one of the opportunities that we had, because we had set up our real estate business and we've been doing it for 25 years, when a major life-changing event happened, the Oso mudslide happened here in Washington. 43 of my neighbors, they were my neighbors, got taken home, right? And it was devastating to our area. But because we set up our business the way we did, I had the time to immediately jump in. I have EMT background, search and rescue, all of this. So I was able to work with all the other community and we immediately could jump in. I didn't have to worry about going to a W-2. I didn't have to, right? We had set up our business in such a way to take care of this. And so that opportunity to be there for my neighbors was such a blessing to me. But even more so, I saw the need. There was massive amount of people, hundreds of thousands of people wanted to help, but they didn't know how, right? So the opportunity came to me. I was able to coordinate and collaborate with literally state and government officials. And later the president even came to visit. And all of this opportunity came, right? Because I saw a need, fill a need, right? And in doing so, when other people would call me up, Bethany, I want to help, but I don't know how. I have no money. Here is a perfect opportunity. I explained to them how they could use other people's money to be a blessing to this group. And they're like, what are you talking about? I said, I know your money's all invested right now, so you have no cash. So I said, do you have any lines of credit? And they're like, well, yeah, dozens of them. And I said, are you willing to put money forward that you can pay off later? And they said, 100%. And I said, okay, I need a semi truck full of water. Get me a semi truckload full of water. And they could do it 100% on their lines of credit. Or, oh, we need bedding, or, oh, we need waiters and all this boots and different equipment. They used 100% of their credit, other people's money, to be a blessing immediately, right? And then they just paid it off. And they were so happy that they could participate. It just needed somebody to tell them how, to show them a path. And so that's what we're trying to do, right? At American Made Home Solutions, we're trying to show people there is a path, there is light, there is hope, and there is opportunity, and just continue to present those to them in whatever capacity that means, whether it's through credit or real estate, whatever it is.
Oh my gosh. As I said earlier at the beginning, I'm like, this is just such a one layer of Bethany. What is the best way for people to contact you and get in touch with you?
So our website is americanmadehomesolutions.com. On our website, we've got different tabs on there. So if you're an agent looking to join our team, we have dozens of agents all across this country. If you're an investor who's looking to get into either single family rentals, we offer turnkey rentals. We also, any deals that we don't want, we pass along to anybody else who wants them. We also offer multifamily. You're interested in getting in multifamily, don't know how, want to work with a seasoned operator and make those good returns, but also make a difference in those communities. We have an investor tab there and you can connect with us there. If you're interested in learning about the credit or the executive rentals, that's all on the website there. And then I do have a couple free promos I'd like to give to your listeners. So I could give them in the, I will send you the link, and that link will have, there's two different things that I have. The one is 7 things that you can do right now to improve your credit score within 30 days. And then the other one is 25 different ways that you can make money in real estate. And you will be shocked at what's on this list. People are like, no way. And I'm like, yeah. And then they're like, well, tell me how. And as soon as I tell them, they're like, oh my word, that's ingenious. So we've got investors with as little as $5,000 making 20% return on their money, loving every minute of it. And it's like, guys, this is 100% possible. You just need to think differently, and you don't know what you don't know. So start asking.
Oh, I love it. I don't even want to end this episode because I know you have so much more, but I have to honor time left and right. Thank you so much for joining us. And if you are listening right now, please make sure, if you're enjoying this episode, go and rate and review this episode. Let Bethany know that you learned a ton from this episode, and then make sure you go and check out her website, grab those freebies that will be in the show notes, and just show some love and grow, because I love it. You don't know what you don't know. Think different.
Exactly. And you can always reach out to me on LinkedIn as well. Happy to connect. Like Julie said, if you're not on LinkedIn, get on, right?
Oh my gosh.
Reach out to connect with us there. Every week we publish a video, our blog, Diary of the Remote RV Investor. You can hear the funny stories about all of our travels, all of that you'll see up there, as well as our YouTube channel that has tons and tons of free information that can help you along whatever path you're doing life. I think this last week I posted how to feed your family on a budget. I mean, just great, incredible hacks of all kinds of tricks and trades that we'd love to just give away.
And they're so important. Awesome, listeners. Thanks for joining me again. And until next time, go find your freedom. Thanks so much for joining me for another episode of Ask Me How I Know. This episode was brought to you by 3 Keys Investments. They are dedicated to helping people like you, you, my awesome listeners, develop passive income and legacy wealth through multifamily investing. Feel free to check out their website, 3keysinvestments.com, to see if there is an offering that will help your portfolio grow and meet all of your needs. If you haven't already rated, reviewed, subscribed, liked, all of those bells and whistles, I would be absolutely honored if you would do that for Ask Me How I Know. Thanks again, and go make it a great day.